So today we're going to take a look at my dividend investing portfolio on M1 Finance, and we're going to see how much we earned in dividends last month and essentially how we're doing overall. So we're going to hop over here on the computer so you can follow along in real time. So this is my portfolio right over here. It is nicely called Dividend Earnest. Currently our value on our portfolio is about 65,367. Has gone down quite a bit over the last couple of weeks. So definitely wanted to share that and kind of showcase, things not being on the great side all the time. So if we switch over here, we're going to go to the day. Over the last day, it's actually not too bad. It's been up about $831. And then over the last week, about $1,200. But if we take a look at the month, we're still down $6,600 and almost $80, which is pretty incredible when we take a look there. Now, I still have been investing, and I'll actually go into my activities tab so we can see. If I can remember, I'll actually break down some of the stuff I've been buying. Some of the stocks I've had in the portfolio have taken a pretty large drop, so I've been investing more, a little bit more than I do on a weekly basis. If we go to the quarter here, we're still down about $5,000, almost $500 for the quarter, but we have earned so far about $185 in dividends during the quarter. And if we look at the last year, we're still up almost $4,000, and we've made almost $543 in the last year. Now, if we go to our all-time tab here, we're up about almost $8,600 and almost $800 in dividends. So that's really awesome. And hopefully we can still see that continuing to grow. I like looking at this little graph right over here because I always show people that I started out this account with $100 on the 23rd of January back in 2019. And then I just kept investing. And as I got more comfortable, I kept investing more and more. And now the portfolio has definitely grown pretty substantially. So if you're somebody who wants to get started and you see these larger numbers here, if you're not, you can get started with a smaller amount and then build up over time. Now, I'm currently using M1 Finance. This is the platform I love to use. And if you want to check them out, I will actually link them in the show notes down below for you, so you can go ahead and check them out. They do have a nice bonus for my users who want to go on there and sign up as well. But the cool thing is it does help support out the channel, so you get more free content like this because I don't charge for anything. So let's go ahead and take a quick look and see our activities here. And I want to show you just our dividends right now because that's going to be the main focus, and I'll come back again if I can remember to go through and look at some of the deposits that we've made. So let's take a look for last month. We only got paid out 3 different times last month, so a little bit of a slower month when it comes to payouts, but it was a really nice month overall. So you can see here we got paid out on the 3rd with ADP. We got paid out a total of $9.49. Then on the 14th of the month, we got paid out from Digital Realty Trust for about $10.98. And then the big one here was January 28th from NRZ. And we got a total of $31.76. So obviously you can tell quite a bit more on that last one there than anything else. But when we combine that all together, if we go to our dividend spreadsheet here, that was $52.23. Now, let me zoom in just a tiny bit here, just so it's easier to see for you guys. So, I think I lose my pen. No, I still got it there. Okay, so January 2022, that's what we just added up together. That right now, if you compare that to last year, is well over doubled right there, right? Because we did $25.05 in January of 2021. So a really, really nice increase from the year prior. I always like getting an idea of how I'm growing. That's why I love doing the spreadsheet. I'm actually going to be probably hiding 2019 here soon, just because this is going to start becoming really irrelevant as the portfolio keeps growing, because at this point, if you see, there's a couple months in 2019 where I didn't even get paid a dividend. So eventually I'm not going to need that in there, and I can just start comparing 2020 and 2021 to what I'm making now. So you could see right over here where in 2020, we actually only earned $2.39 in the month of January. So we're definitely seeing some really nice increases year over year. And then I also like to compare from the prior month in the last quarter. So this is the first month in this quarter. So if we look back in October of 2021, this is a nice comparable. We did $35.16, and now we're doing $52.23. So again, a really good increase. And the reason I like to compare those is because those are typically going to be similar months of companies that are paying out in that given time. So what is it? It's January, April, July, and October are the same months usually from the same companies. So that's why I like to do those kind of comparables. And so we're definitely already off to the races when it comes to beating our 2021 total, which let me scroll down there so you can see. So our 2021, in the first quarter, we did a total in the first 3 months of $122. And then in the year, we did $514. So I definitely see us surpassing that by a long shot, especially if we can keep up the trend of how we've already started this year. Plus any companies that are doing dividend increases, investing more into the portfolio, and hopefully things are going, up and up. So you can see here, I also did a little percentage. This is comparing this current new month to the October month. So that was a 48.55% gain from what we did in October of 2021, which was, again, the comparables when it comes to this quarter and last quarter. So again, I just kind of wanted to do that to get some ideas. And then obviously, since this is the only month thus far that we've calculated right now, on average, we're making about $52.23 a month for this year, which is really exciting. Obviously, we want to get a goal of getting $100 a month, and then eventually move on to like $1,000 a month too. But comes with time, and obviously certain months are going to have higher increases and other months are going to be a little bit lower. But again, we're looking for that average of 100 for this year. Will it happen? Stick around and find out. You can hit the subscribe button and you'll find out later on down the road as we share this insight and how we're doing. I definitely want to also look at seeing how we invested over the last couple weeks since everything has been down, and also talk about a dividend increase that has been pretty significant, and then how much that's going to impact us down the road. But before we do that, I just want to let you know, if you're somebody who needs to refinance your student loans, check out my friends at Earnest. They help you refinance your student loans entirely for free. But here's the cool part. If it helps you lower your interest, you can save thousands of dollars. And then that money can be put into new investments for the future. So you're actually doubling up right there if you can save money on interest and then invest that money if you wanted to. You can do whatever you want with those investments. But check out their rates. It takes about 2 minutes. I'll have them linked down below. Now, going through that link, again, helps support out the channel as well, too. But it does also give you a nice little bonus if you can end up refinancing your student loan. So check them out, save some money, and let's continue on with our investments. So I'm here on the Dividend tracker. This is actually made by my friend, JJ Buckner. Right now, I'm taking a look here to see... Oh, that is a big dot right there. Oh yeah, I can't use my pen in this app for some reason. So right now our current dividend yield, you can see here, is 1.52 because of how things have dropped over the last couple of weeks. Our yield on cost is 1.75, which is actually pretty high. I wasn't expecting this to get close to 2% until maybe a year or two down the road. And then our estimated income for February is about $40.61. We'll see if that changes. Obviously, if I'm buying more into the companies, that can change up until then. And then our annual income is about $675. And of course, I definitely want to surpass that by investing more throughout the year as well, too. So you can see some of our holdings here as well, and how everything is coming together. I just like looking at my portfolio in different formats. It helps me out a little bit as well, too. I can see the changes. I can see the equity, the average prices, and stuff like that on which ones I'm overpaying with possibly. So let's take a look and see what we invested with here. So let me clean this up here. Let's reset this. So I had a little deposit in there of like $30, but let's see, like $900 or $900, $536 is what I invested recently. $500 was my deposit, and then $36.73 I believe was from NRZ. So you can see right over here what I ended up doing was investing more into ADP, Next Era Energy. Airbnb had a huge drop recently, so I did that. Ross has been dropping pretty significantly on my portfolio here, so I am dollar cost averaging quite a bit there. Google, I've been buying a lot into. Facebook, even though as of this recording they had an even crazier drop, so I'm going to be investing more into them. Block, which is essentially the Square readers, and then Amazon and Tesla. So some of these companies obviously don't pay out those dividends, and that's okay. I don't need all of them to pay out dividends now, but if they do in the future, that can be really, really helpful. I did look, I'm going to jump over here to Seeking Alpha. I did look on this website. So what I like about this website is obviously they give you all the information we need, so like earnings per share and stuff, which is crazy how much earnings per share they had. So I like going into their dividend tab here, and even though Google doesn't pay a dividend, they do ideas of, hypothetical projections where, let's say, like most companies in their area, if they do pay out dividends, it's a very small percentage of their overall earnings. So let's say they paid out 20% of what they've earned. That would equal out to $23.16 a year per share, which would be a yield of 0.81. Now, obviously, that's not a lot, but that's still better than nothing. And if you already have stock in them and they start paying out a dividend, it's such a big win for a lot of investors. And Apple did that years ago where they weren't paying out a dividend, but if you held on to them and they started paying out that dividend, it's just a much sweeter bonus on top of everything. So I doubt that they would go to the 60% ratio here to get that higher yield. I don't think they're going to look for the higher yield. I think if they were to pay out a dividend, I think they would kind of stick around the lower tiers there. But if I'm building my position now, all the better, because I think with Google, I own a little over 1.5 shares of there it is. So I own 1.65238 shares, which they just announced a split recently of 20-1, which is insane. So it doesn't do anything for the actual fundamentals of the stock, but for anybody that's kind of like curious, so just as an example with fractional shares, I'm missing a number there, 65328. So I'm going to times that by 20. So I'll end up having 33 shares of the company, but obviously the price is going to go down, by 20 on there. So it's going to be relatively the same. But obviously a lot of times when companies split stocks on like a 2-for-1 or 20-for-1 for this example, it looks really good and healthy for the stock. So hopefully that'll keep going up. And then, 33 shares. That'll be nice. But for now, I don't mind having these fractional shares, buying in small bits at a time into Google. Now, if we go back in here, so you can see right over here on the 26th, so just a couple days prior to that last deposit, I did another 550. You can see here we did Facebook, Ross again. I put like $3 into NRZ to have like a nice round, I think 130 shares. Again, into Amazon, Costco's been a good one. Google, Home Depot, Airbnb, Microsoft, and then Texas Instrument, building up my positions in all of these companies, which is really nice. It kind of helps out. So when we are looking here, you can see how many shares we own of every company. Apple is our biggest holding right now as far as value. So we have 46 shares of the company. Microsoft, we have a little over 23 and a half. Airbnb is actually my third biggest holding here. We have 33 shares. Right now I'm still down on the company, but I definitely believe in them long term. And seeing where they're going to take off. My hope is it's going to be a really good earnings down the road, because I think right now, based off of all their numbers and performance, that they're really still in their growth stage. So I'm not looking to see the company profiting in the very near future, but down the road I can see them definitely having a lot of that control and earning some profits. Home Depot, you can see here, we have 14 shares, and they are my fourth largest, and then Google comes in at fifth, and then Tesla sixth, and then Ross right here, down about almost 16% on Ross. So right now, I am definitely still buying pretty heavy into the company. Definitely see opportunity there to be able to continue to grow that holding. Now, one thing I did mention as well too is that I did have a company recently increase their dividends. And this is one thing I do like to share with dividend investors, because I think it's really critical if you are wanting to get paid out, $100 a month or $1,000 a month or whatever amount of money years down the road, is to pay attention to the companies that are increasing their dividend yields and how that's going to have an impact on you. So Ally Financial, I've held them for a very long time. When did I buy them? August 14, 2019, so a very long time ago when I started getting into holding this company. So I have about 29 and a quarter shares right over here. So let's go into Seeking Alpha so I can show you here. So for Ally Bank, right over here, I'm going to go into their dividend use so we can see here. So they did a 20% increase in dividends, which is really cool. So if you're not too familiar, if you already own the stock and they're paying out a certain dollar amount per share, and they do an increase, you get that increase without having to do anything different. So you can see right here, they declared a 30-cent increase, which is, 30-cent, increase, which is 20% from the prior dividend of 25 cents. Now, a nickel's not a lot of money, right? It's not a big change. But what I do like to show people is the impact it can have over time. So if we go to 29.24519, because I want to count my fractional shares, you get paid out your dividends in fractions on M1 Finance, and any company that does fractional shares for that matter, which is what I love about buying fractional shares, is you get those dividends as well. So if you're not already investing, make sure you are. And again, I'll have that link down below if you want to check out M1 Finance. But let's go ahead and just add in 5 more cents, because that's how much extra we're going to get paid out every quarter from Ally now. Now, obviously that can change in the future, but from their history and like where they're wanting to go with the stock, it looks like they're going to keep that and then continue to grow. So that's an extra $1.46, which again doesn't sound like a lot of money, but I mean, that's extra money that I don't have to do anything for on top of what I was expecting to get from the stock. So if you do that times 4 in a year, that's $5.84 more cents that I'm going to make in that given year for having just held the stock. Now, if you think about 10 years from now, if they keep increasing their dividends and I keep buying more shares, that 5 cents can have a really huge impact. Can you imagine if I had, let's say, 300 shares of the company? That'd be an extra $15 a quarter, and then that's $60 extra in a year for having, again, done nothing more than just hold the stock. And same thing's true for a lot of other companies. As they keep increasing their dividends, you keep getting that extra value for having done nothing more. Because if I go back, what was it? 29.24519. So that extra 5 cents is $1.46. The way I like to look at it is, to get even the 30 cents, you need to buy 1 share of the company. So if you take this and divide that by 30 cents, you would have needed to own another 4.87 shares of Ally to get that same dollar effect in dividends that you had just automatically gotten. And then if you take that $4.87, hopefully this makes sense for you. And then that way you could follow along for the future to figure out what that would cost you. So in order to buy those 4.87 shares, you need to spend $236.73 to get that same dividend as if I just got that increase. So that extra 5 cents is huge, even though for, $1 and some change doesn't seem like a lot. You'd have to spend, $236 to get another 4.87 shares to then have gotten that same increase as if you didn't get that dividend increased overall. So that's pretty powerful. I like seeing stuff like that because that means my money is working for me, and now I'm going to earn those extra dividends that I can then have paid out and then reinvested back into my portfolio, so that way I can continue to have even more growth. Now, in case you're curious about this dividend income sheet, I will have this linked in the show notes down below for you in the videos, so that way if you want to get it, it's entirely free. You just got to sign up for my email list. I send like 1 or 2 emails a month. I don't really bother people too much with it. And then that way you can start filling this out yourself, get some ideas of how you're looking month to month, even year to year, so that way you can keep track of things. And I encourage people to go back and fill it out with like previous months and years if you can, just so that way you can really see that growth happening. Because I think month to month it might not seem that much, but then as you keep building it up and you see it happening on like a screen, and then really see that impact, probably will get you even more excited to continue to grow your dividends. Now, you probably know this if you've been following along, but I love watching more and more videos when it comes to dividend investing, and I want you to keep watching. So I'm going to have that next video right over here with my floating hand, so you can continue to learn and grow with your investments. My name is Dennis, and I'll see you in that next video.